So very good morning, everyone. Welcome back to the classes for the Corporate and Economic Laws for CA final course. In our last class, we had covered the topic of SEBI and the relevant provisions. And today we are going to cover the remaining part of SEBI. Along with that, we are going to take up the important regulations of LODR, which is applicable to listed companies. So there will be two topics to be covered today. If you have any doubts regarding the previous class about SEBI and the relevant provisions, where we had covered the purpose of SEBI, the administrative part of SEBI, the powers of SEBI, investigative powers of SEBI, that is 11C. 11 is the main section where the powers have been given, along with the penal provisions, penalty levied under Section 15. There are about more than 10 scenarios where penalty is levied by SEBI, especially on the stockbrokers, the intermediaries. And then the one provision which is very common, that is on insider trading and fraudulent and manipulative practices followed by the listed companies or any company which is intended to get its shares listed on the stock exchange. And then we had the provisions of the investigative authority, the power of investigative authority, the directions or the basis on which the investigative authority will levy the penalty. But again, we have seen that is that the end? No, probably all the people have the provisions of going for appeal, and then we studied the provisions of SAT, that is the appellate tribunal. And that appellate tribunal will cover the provisions under SEBI as well as the other regulatory agencies of IRDA, Pension Regulatory Authority, and so on. So we had covered those topics. Just a simple message from people who have logged in and watching this live class. That would be great, so that I can understand that students have logged in. And if you have query, please do start raising it. So now we'll cover the miscellaneous provisions under SEBI, especially the recovery part. That is important because there were a few questions which has been asked in the previous attempts on the recovery. And then we will move on to the LODR provisions. The LODR provisions are short, more of procedural things, and some elements are common with the Companies Act also. So that will not take much of time. So friends, under the miscellaneous provisions, we have the first section which talks about the power of the central government to issue directions to SEBI, because finally SEBI has been formed by government, and if required, the central government has got the power to issue any directions, whether it is question regarding with the policy or other matters, then functions of the SEBI under this act. Then the central government may issue the directions. And if any time the central government thinks that the board is not performing, then it can supersede the board and take over the board. Obviously, the time period will not be more than 6 months. Okay. Good morning, Malvika. And anytime the board, central government can supersede the board, but then that period will not be more than 6 months. I think we all understand, friends, that MCQ is a very important element, and all these time periods which come in various sections, various provisions, that is important from the MCQ part. So this is again a very exceptional section where the powers of the central government have been given, where they can supersede the board, but the time period is not more than 6 months. The conditions why the central government will supersede the board is mentioned that on account of grave emergency, where the board is unable to discharge the functions, where there is a lot of irregularities in the functioning of the board, and the board is overpowering its own duties. Therefore, the central government thinks that now it is time to take over the board. It may do so. Or it has been consistently making defaults in complying with any direction issued by the central government. So that may be a scenario. And obviously discharge of the function and duties imposed on the board. So Wherever the central government thinks, I think this is clearly a theoretical question. 4-mark question could be asked, and very scoring, very simple one. And the last one is obviously when it thinks in the public interest. So remember the fact that the central government has the power to supersede the board, various situation, emergency, with respect to discharge of functions, potentially made default in complying with indirection, default in discharge of functions imposed under the provisions of the Act, and as a result of such default, the financial position of the board has deteriorated. That means the board is into losses. Many losses are being incurred, and there are not many money left in the fund to even pay the salary part. These are all, very unique situations where, as of today, there has been no such precedent. So probably we don't expect also, but yes, these are all precautionary measures given in the Act. Now this is, yes, relevant. Special court. Now we know that special court has been established under company law also. And these special courts are established for speedy trial of offences. So the special court will consist of a single judge appointed by the central government, along with the concurrence of the Chief Justice of High Court. And the purpose of central government, the special court, is only to give momentum and speed up the process of any cases which are pending. So that is all about special court. So just remember that in case required, the special court could be formed for a specific purpose. Then when we talk about penalties on the stockbrokers, mutual fund, Section 27 covers within itself the company as well as the people who are in charge in the conduct of the business, including the managers, the secretary, and so on. So 27 widens the scope of people who could be taken in the ambit of any offense committed by any company. So it is mentioned that every person who at the time of the offense was committed was in charge and responsible for the conduct of the business of the company, then he shall be deemed to be guilty of offense and shall be liable to be proceeded against and punished accordingly wherever the punishment has been mentioned. So along with the company, the people have been included. And when it has been proved that this offense has been committed with the consent or convenience of any director, manager, secretary, or other officer of the company, then such person shall also be deemed to be guilty of the offense. So along with the people who are being involved in the management of the affairs of the company, if any manager, secretary, or any other person who has given consent or has agreed or acted upon with them for committing that offense, then he shall also be liable for punishment. So the purpose of this section is that it's not only about only one person or the managing director should be responsible. Probably every person should be included. So that is why there's a wide ambit of this particular section. So special court offenses and the power of the central government. These are three important, not important, but yes, three small aspects under the SEBI Act, which may, from exam point of view, I don't know how much probability, but yes, if you are covering this SEBI Act as in totality, I would suggest that you should learn these provisions also. Now, this is one which you should not ignore, the recovery part. This is important angle, where provisions have been made with respect to the recovery of any amount which has been due from any company or person. We all know that penalty can be imposed under SEBI. And if the recovery has to be made, then what is the process of recovery under this act? So when the person fails to comply, now this is important, directly asked in the exams, situations when this recovery measures would be taken. So first is when the penalty imposed by adjudicating officer. We have gone through this penalties. Section 15 covers various penalties. Failure to comply with direction of board for refund of money. There might be a situation where board has given directions that you should refund the money, not imposing penalty, but maybe refunding money to the investors on account of any transaction or for any account of any fault being committed, and no penalty has been imposed. Yes, fails to comply with the direction of a disgorgement order. Disgorgement order is nothing but where the order has been given for any attachment of any property, then that is maybe the disgorgement order, and any fees which is due to the board for a longer period of time. Then in that case, SEBI may take steps for recovery of the amount. So who will take the steps? Remember, recovery officer. Recovery officer. So now there are different people who have been assigned certain jobs. So remember, one was the investigating authority. The second was the adjudicating officer who imposed penalty. The investigating authority would do the investigation part, the powers to issue directions under section 11C. Now here we have another person, the recovery officer. So there are different persons have been given this different responsibility. Now the question is how the recovery will be made. So the recovery will be made based on the amount specified in the certificate. That means there will be a recovery certificate which will be given to the person who has committed the default in not paying the amount. And based on that recovery certificate, the recovery officer will start or initiate the proceedings. So how the attachment will be made? This is important, the process of attachment. So first, the attachment and the sale of person's movable property. So first, movable property will be attached because we all understand they can move. So before the properties are moved, it will attach the movable property, then bank account, then immovable property, then if required the arrest of the person, and if required appointing a receiver for the management of person's movable and immovable property. That means finally at the end of the day, if the amount is not paid, they can go for the attachment and appointing a receiver also for managing the assets of the company and realizing the amount from the sale of the movable and immovable properties. So this will be the sequence of attachment. So very logical. I think in most of the cases, the sequence is same. And so if you remember it once, probably you can apply it any other case. So very logical method of attachment of any property. Now, very important, friends, this is explanation where I think once an exam question has been asked, or maybe some questions in the study material has been given. The question is about the property person's movable or immovable property or monies held in bank account shall include any property or monies held in the bank account which has been transferred directly or indirectly on or after the date when the amount specified in the certificate has become due. So when the amount has been due and after that due date, you transfer certain amount. To whom? To his spouse, minor child, son's wife, son's minor child. Otherwise than for adequate consideration, this is to be proved. Or which is held by or stands in the name of the person aforesaid. And so far as the movable or immovable property or money is held in bank account, so transferred to his minor child or his son's minor child is concerned, it shall, even after the date of attainment of majority by such child, continue to be included in the person's movable or immovable property. So all the amount which has been transferred after the due date, after the amount has been due, that amount will be also included, provided that transfer has been made without adequate consideration. So remember, for recovery, the reasons for recovery, 4 reasons. Second, the sequence of attachment. And third, the amount which has been transferred or properties which has been transferred, that will also be included in the overall attachment of properties. 3 things to be remembered for the recovery part. Any liability on the legal representative? Yes, he will be liable to pay any sum which the deceased would have been liable to pay. And that amount will be only to the extent the value of property which has been transferred to him. Right? And remember, he will be liable for only those penalties which has been imposed on him before the death of the original person. So not for any penalty imposed after the death. So liability of legal representative will always be there. Understanding it through in the form of example, Harish failed to pay the penalty imposed by AO. He transferred his residential property to his sister and fixed deposit in the bank to his minor son. The minor son has become major and deposits continue to be held by son. Discuss whether the residential property and fixed deposit can be attached by the recovery officer or not. So as per the provision, if the property has been transferred to his sister, now here, remember, no mention of sister. No mention of sister. So therefore, that cannot be attached. But the FD which has been attached to, which has been transferred to his minor son, that will be attached, and even the minor son, when he has attained major, has become major, even after that, the deposit can be attached by the recovery officer. So Mr. Ishan, a member of Dream Limited, obtained an order from SEBI against the company, but the company failed to redress the grievance of Mr. Ishan with the time fixed. Consequently, SEBI imposed a penalty on the company, and the company, however, did not pay the penalty also. State how the penalty can be recovered from the company. Now remember, when it comes to the company, we'll go to the offense, and it has been mentioned that that the company would be held responsible for any offense, and thereafter the person who has been responsible for the conduct of the business of the company will be deemed to be guilty of the offense. So finally the penalty has been imposed on the company, but it will culminate as an offense committed by the person in charge in running the business, along with any director, manager, secretary, or any other officer of the company. So if the company is not able to pay the amount, then it will fall on the individual liability also. So first, it should be recovered from the company, and thereafter from the individual person. So that is the answer to this particular question, how penalty can be recovered from the company. So first it will be recovered from the company, and thereafter from the individual person. So this is all about, friends, the SEBI and the related provisions, the small part which I had left in my previous class. So any questions on the SEBI, please do raise. Now we'll be moving on to the provisions of LODR. Okay, friends. So moving on to the provisions of LODR. Again, from exam perspective, the questions have been asked not very frequently. So on and off the questions are asked from this particular topic. So at the end, if you want to study, so concentrate on few relevant provisions. Obviously, today we are going to understand all the basic concepts, why LODR, what is the requirement, to whom it applies, and the whole objective. But when it comes to exam part, I think there will be few important provisions for you to remember, and it is expected that the questions will be around those areas only. But then, as a disclosure requirement regulation, it is one of the very important regulations, especially for the listed company. And if you are involved with listed company as an auditor, or in future if you become a director of a listed company, I think we should be aware of all these provisions. Now, when a company gets listed at the stock exchange, it has to enter into a listing agreement with the stock exchange. So it was seen that there's a listing agreement which applies to a company. Then there is the Companies Act, which the company has to follow. And there was a regulation issued by SEBI where the companies which got themselves listed probably has to comply with all those certain obligations. Now, because of all these different provisions under Companies Act, listing agreement, and the listing obligation, it was felt that it is very necessary that all these should be in alignment. There should not be major differences between all these three compliance requirements on the part of the company. And therefore, from time to time, the listing agreements, the listing regulations were amended. And 2015, where major amendment was done so that proper alignment could be made with the listing agreement as well as the Companies Act. And finally, there should be one regulation where the company could focus in for various compliances part. Now, coming to the applicability, very important, friends, to whom this listing agreement applies. So it's not only about companies to whom this listing agreement applies. It applies to various kind of stakeholders or intermediaries who are involved in this whole process of capital market. So it applies to specified securities listed on the main board, we'll understand this, SME exchange, or innovators growth platform. We'll understand what does this mean. And it applies to securities companies which have issued non-convertible securities, non-convertible redeemable preference shares, perpetual debt, perpetual non-convertible preference shares, Indian Depository receipt also, securitized debt instruments also, units issued by mutual fund. So along with shares, it will include all these kind of instruments also. I think everybody is aware of all these types of instruments. You must have studied about IDR also. You must have studied about securitized debt instruments, that is under SARFAESI. If not, probably it will be covered under the topic of SARFAESI. What is securitization? And we all know what are the units issued by mutual fund. So the coverage is wide, where every type of instrument has been covered. So any company which is listed and issued specified securities, that is shares, or these securities, then it will be covered under the LODR obligations or regulations. Now, what is main board? What is SME? What is Innovators Growth Platform, friends? Though it is very general, but it is very much required that you should know. As I said, apart from the exam perspective, that is good that you have to study something from the exam perspective. But generally, as a prospective chartered accountant, I think, friends, we should have this type of understanding. This is all development of your skill, knowledge, apart from the technical inputs which we are going to get. And technically, we should be strong. But in terms of our broader understanding of the whole market, process, macro part, we need to know all these terms also. Now, main board is nothing but where you see the shares which are traded on the stock exchange in NSE, BSE, where all the companies are traded. You name any top company, mid-size company, small-size company, but whose shares are listed. Normally, they are listed on the main board. They are listed on the main board. And within the stock exchange, there is another board known as SME board, where shares of the small and medium enterprises are listed. So companies which do not fall under the category of main board, because the criteria for classifying to be listed on the main board is a bit stringent, and maybe the capital requirement, the net worth requirement is different. So therefore, for initially when the companies are small and their market cap, their net worth, or their issued share capital is less than a particular threshold limit, and if they want to get their shares listed, SME platform is one of the platform where they can have an understanding that how the capital market behaves, what are the requirements to be fulfilled if they want to get their shares listed. So once they understood, are well acquainted with the environment, then the SME shares could be transferred to the main board. So therefore, this SME segment was launched about 15 years back only, 10 to 15 years back. Before that, I think the SME segment was not there, maybe around 10 years back. And a lot of companies now have got listed in the SME segment. See, from the main board, the number of companies are around 4,000. Maybe in the SME segment, the number of companies may be around ranging from 500 to 1,000. But yes, the numbers are increasing. And definitely over a period of time, all these companies will get shifted to the main board. And then we have the Innovators Growth Platform, which previously was known as the Institutional Trading Platform, ITP. Institutional Trading Platform, where a separate platform has been created for institutional trading, where we have a lot of bulk trading done by institution. So as a retail investor, I would go and buy out 100 shares, 200 shares, 1,000 shares, 5,000 shares. But let's say if you want to buy out around 5 lakh shares, then how do I go about it? So there's a separate segment within the stock exchange where the bulk trading is allowed and you can trade in higher volumes. Normally, it could be done by an institution. So if the institution wants to trade, they will go in the ITP platform to trade. rather than going on the main board platform to trade. So all transactions of the ITP are separately reported. If you want to find out, you can go and find out what are the transactions in the ITP done by various institutions. These are all publicly available information, friends. So I think for all of you who have interest in the stock market, in the capital market, I think for them this will excite. And I think I should suggest the institute also that for a better understanding of all this LODR, Companies Act, especially the listed companies, financial management, portfolio part, and other small provisions under various acts, we should have a practical orientation of the capital market. A separate 2 to 3 days training class should be given, as in line with MCS and OC. I think there should be a 2 to 3 days practical insight on the stock market, because it's not only about trading the stock market, friends. I'm not trying to promote trading. I think it's more important to understand the overall macro setup of right. So LODR has been segregated into 2 parts. One is the substantive provisions, which has been included in the main body of the regulations, which we are going to study. And then we have the procedural requirements in the form of schedules. So there are different schedules which have been mentioned, along with compliance date and the details of the information to be filled in. So our major focus will be more on the provisions, substantive provisions, and especially focusing on few of the provisions. So we'll not focus on this because it is purely a procedural part. And within this substantive provisions, friends, we have a certain, remember the word, it is more of an obligation. So when it is an obligation that the company has to comply with. So the obligations are with respect to common obligations, which is 5 to 14, which applies to most of the companies. Then this is the major part, friends, corporate governance provisions. I think the overall objective under the LODR would be to ensure proper corporate governance in all the listed companies for better transparency, disclosure, and other measures to be taken by the company for preserving the wealth of the stakeholders. And then we have the intimations and disclosures which are required by the company from time to time. So if you go through any of the annual report of any company, so within the annual report, I think the major part of the annual report, apart from the financial statement, which is a compliance of the Companies Act, and the notes to the account, which is as per the Companies Act, apart from that, whatever is there in the annual report, you will see that it is majorly because of the LODR requirement, listing obligation requirement, majorly. So first we'll go to the common obligations, then the corporate governance provisions. So two types of things which are to be understood in this particular LODR provisions. Okay, so before we go ahead, few of the questions, just to again recall whatever we have studied for a better understanding. So SEBI LODR regulation shall apply to listed entities who has listed what? Specified securities listed on SME, IDR, non-convertible debt securities, all of the above. And I think everybody knows, I think very simple. Everybody should be able to answer it. The answer is all of the above. First, let us start with the common obligation. Common obligation. So common obligation talks about the person who is responsible for compliance part, who will do the compliance. If a compliance has to be done, is it the director, is it the CFO, who is responsible for compliance? And the definition of compliance officer. Then something about share transfer agent. Remember, I think we have discussed this about in SEBI also, is one of the intermediaries who are involved in the whole process of share transfer. Then how the information to the securities intermediaries will be given by the company. Then the filing of information with the stock exchange. See, finally, at the end of the day, every company has to inform to the stock exchange. So how that filing will be done? What is the way? And then common obligation of creating and grievances cell for addressing the grievances of the stakeholders, basically majorly of the shareholders. So these are the 6 parts which every company has to comply with. So the person for compliance responsible, KMP, directors, promoters, any other person dealing with the listed entity shall comply with the responsibilities as prescribed under LODR. So that means the total responsibility lies on the board and the KMP. Board and the KMP. Now, as a board and as a KMP, probably I'm not aware of the detailed regulations. As a board, probably I know that company has to follow LODR and there are provisions regarding corporate governance, committees and so on. And I need to report in certain due dates. But what about the process part, and what about all the changes which keep on happening from time to time? So it may not be possible for the board to, to be updated on a real-time basis. Obviously, the updations are not done on real-time basis, but generally speaking, that because as a board we are involved in so many other areas. So yes, the responsibility has been casted on the board, the KMPs. But this whole compliance will be done through a compliance officer. So this regulation gives us the leverage, enables a provision which tells that, okay, the obligation has been casted on the board, but to give you that support to ensure that you comply, we will allow you to appoint a compliance officer who should be a qualified company secretary. And the major job of that compliance officer would be ensuring conformity with the regulatory provisions, that is LODR, coordination with the reporting and the reporting to the board, exchange and depositories, and ensuring that all the correct procedures have been followed in filing, and monitoring the email ID of the grievances redressal division. So he will be keeping a watch on all the mails received and replying to the mails received. So that has brought in certain kind of relief to the board that yes, okay, I don't need to worry about all the daily procedure aspect. I can take the support of this company secretary who will do all the requirements. So maybe he will present me that these are the requirements and this has been complied with. So he ensures conformity with the regulatory provision, determining the materiality of information to be reported to the stock exchange, report to board about compliance. So he will give a report that yes, we have complied with all the listing requirement. From time to time, he may guide the directors that probably this is their duty. So it is the compliance officer who is the guiding factor force within the board. So when I say within the board, that means he will assist, he will attend the board meetings, and from time to time he will advise the board that you are to comply with these requirements. So therefore, for compliance part, you have to perform these kind of actions, take any steps in the company. So the board may, again, based on this report understanding from the compliance officer, will give necessary direction, implement certain systems within the company. So that is the job of the compliance officer. So a direct question could be asked in the exams with respect to this particular topic. Who will do the compliance part and what is the role of that particular compliance officer in the overall compliances mentioned under the LODR regulation. So exhaustive one, but yes, a simple one. So the role of the compliance officer is to what? To report to the board. Yes. Determining the materiality of information to be reported to the stock exchange. Yes. Assist the board in the conduct of the affairs of the company. The answer is yes. So obviously, in this case, the final answer would be all of the above. So these are small, questions. And as I said, if you just go through the provisions, probably you'll have an understanding. And it is just that one of the papers where even 1 mark MCQ is asked, and if you have gone through the subject, that 1 mark can make a lot of difference. A listed entity shall appoint whom as a compliance officer? So we know that it's the qualified company secretary who can be appointed as a compliance officer, not a qualified chartered accountant or even a lawyer. Yes, so coming to this word STA, shareholder transfer agents, share transfer agents. Now, friends, again, as I said, it is very important for all of us to understand the whole, the stakeholders involved in the capital market. So the various stakeholders who are involved in the capital market is, we have the registrar, bankers, lead managers, share transfer agents, then depositories, majorly, and then we have the stock exchange, obviously. So majorly, if you see that these are the people who are involved in this whole process of the capital market. All these are governed by SEBI. All these are intermediaries. So if you talk about stockbroker, see, as a company which is listed, it is not concerned with the stockbroker. Stockbroker is directly in contact with the investor. Stockbroker is not in connect with the company. So they will not come within this purview. Mutual fund, the answer is no. Mutual fund is more of an investment agency. So investors will pay the amount, then mutual fund will invest in the companies. So they don't have any role in the whole LODR process. So do the bankers have any role? The answer is no. What I'm trying to give you is that who are the stakeholders involved in this whole capital market? There may be a few others also, but majorly these are the names which will come regularly. So normally the role of the lead manager comes in when the company initially comes out with an IPO. Lead manager is the company or the agency which will help the company to go out in the capital market, raise funds, normally maybe in the form of a merchant banker. So that is a merchant banker who decides on the price of the company, promotes the company to various investors, and the merchant banker is again governed by SEBI. So that may be the lead managers to the issue. Then we have the registrar, the depositories, where the shares will be deposited, where all these records of the shares will be kept in the dematerialized form. The details of the shares will be kept with the share transfer agent, and whatever shares are being transferred from one person to another, that information will be passed on by the depository. That information will be passed on by the depository. So understand, friends, lead manager will be only needed when the company comes out with IPO. Registrar is a company which will help in the allotment process when the company comes out with IPO. So they will collect all the applications, record all the applications, supporting the allotment process. That is the job of the registrar to the issue. So that will be again in the time when the IPO has been launched in the market. Bankers is basically nothing but where the amount will be deposited when the company comes out with a public issue. Whatever amount received will be transferred to a particular bank. So they'll be termed as the bankers to the issue. So these are the three agencies who are normally in the picture when the company comes out with IPO. And thereafter, once the process is over, then we have the share transfer agents, depositories, and the stock exchange, where major dealing will be done. So the job of depository is to convert all the physical shares into demat form and keep the shares in the dematerialized form. That is depository. That is the job of the depository. Keeping the shares in the dematerialized form, depositing the shares in the dematerialized form, and transferring the shares from one investor to another investor in case of buy and sell of shares to the stock exchange. So all this will be done through the depository mode. So it's basically a location where shares are deposited in an electronic format. That is the difference. Now, who are the shareholders of the company? All these details will be kept at the share transfer agents. So it will maintain the details of the security, all these shareholders, and also deal in the transfer of securities. And that information of transfer of securities will be given by the depository. Because as a process, remember, as an investor, he is an investor. He will approach a broker. Broker will trade in the stock exchange. There's another broker. And there's a seller or a buyer, whatever. So let's say A wants to buy shares. So it will approach broker 1. Broker 1 will see the rates on the exchange. The rates are being posted by broker 2 on behalf of the seller C. So as of today, the shares are lying in the depository. Shares are lying in the depository. Under the account of C, when A will buy the shares will be transferred from this particular account maintained at the depository to the account of A. So the A may be maintaining the account with this particular depository. Obviously, C will not be in direct connect with the depository. So it will be through some intermediary, let's say a bank, or it can be broker. So banks are allowed to keep all these depository accounts. Even the brokers are allowed to keep the depository accounts. So we have a depository account maintained at the bank or at the broker. Normally today, the broker keeps the account, but the banks also keep it. So here also, there's a bank or the broker, and there's a central depository, which has all the records of the shares in the electronic format. C, through its bank account or depository account, will transfer the shares to A's depository account. The shares will be transferred. But how does the company know that now the shares are being transferred from C to A? How will the company come to know about it? That who has purchased my share? So this depository will give information to STA. This depository will give information to STA, who keeps the record of all the security holders. So the STA will now update its record that now these shares are transferred to A. Now A is the owner, and A will have all the rights and benefits against those shares. So this is how the whole transaction works, friends. Any questions on this process part? It is just for the explanation, for understanding that what is STA, what role the STA will play, when it will play. Okay. Now coming to the job profile. Registrar to the issue, which you have understood. What is the job of the registrar? So the share transfer agent will be appointed if the number of security holders exceed 1 lakh. So it is only required. See, the details of the shareholders could be maintained by the company also. But if the number of shareholders are more than 1 lakh, probably it may be difficult for the company. So in that case, it has been advised that you please appoint the share transfer agent who will do the job on behalf of the company. Normal half-yearly compliance report will be given within 1 month of the end of the half year. If any change of share transfer agent has to be done, it is through a tripartite agreement between the old, the new, and the company. And if any new appointment is done, it should be intimated within 7 days. So more of a procedural part, you can ignore it from the exam perspective. But I as a knowledgeable person, I think we should all know that shareholder transfer agents are third-party companies which do a specific job. It can be done by the company itself. But as per LODR, if it is more than 1 lakh, we have to appoint a STA. So within STA, there are 2 categories. So category 1, if there are less than 1 lakh security shareholder, they can act as registrar to the issue. As I said, registrar to the issue is the people who are helping in the allotment process. And there could be category 2, if their number of securities are more than 1 lakh, either they can be a share transfer agent or registrar to the issue. So there are 2 types of category of share transfer agents. So there are many companies which fall under this category. as a registrar to the issue, friends. So if you see the ads of the company coming out with the public issue, then you will understand the name of the companies which are into this particular business. Now, remember, friends, as a company, even you are responsible for providing certain kind of information to the intermediaries from time to time. And the responsibility has been casted on the company to provide information under Regulation 8, including rating agencies and share transfer agents. So let's say if the number of shares have been cancelled, if you receive any information on your grievances part, then you need to inform the share transfer agent that this person has wants to assign its shares to this child because of certain will or whatever, or by order of court, these shares are getting transferred. So that information has to be given to ST also. And along with that, whatever information you want to go to the rating agency, which may be necessary for the rating agency to know for rating of the company, that information has to be given by the company. So again, not to be understood, not to be remembered. Yes, on preservation of document, friends, we all know that the companies have to keep records as per income tax or as per GST Act or any other law. But even within LODR, there has been a specific requirement of preservation of document, which has to be approved by a board, which has to be in the nature of permanent in nature, and they have to keep the records for 8 years. That means now, today you will see that the company approves a policy on preservation of documents. So that means that highlights the importance of having backup, data storage, a backup policy, where these documents will be kept, who will handle these documents, under whose charge the documents will be there. So a separate policies are created now. These are all very much required, friends, to keep a record for so many years, because we know a lot of consequences happen later on, for which we are, people come to know at a very later stage. Maybe some investigation for security purpose and so on. So very much required and need of the hour, and the responsibility has been casted on the board because it has to be approved by board. That's important. So a policy is created for all this process. Now, friends, as I said, that it is a listing obligation and disclosure requirement. Now, where do I disclose? Where do I inform? So what has happened? That a platform has been created. Platform has been created by the stock exchange, where all the informations are updated, uploaded, and thereafter the stock exchange will bring that information on the public domain. So through a platform, that information is uploaded, and then that information may be available on the public platform. So you go to the NSE website, the BSE website, you'll get all the information about the company. That is because the companies have uploaded the information on a platform. Yes, for the grievances redressal mechanism, because of the increased awareness of the shareholder and a lot of companies vanishing from the world, therefore this mechanism was developed, where it has been made compulsory on behalf of the company to register themselves on the Scores platform. As I said, this is a platform where we have the information which is uploaded by the company. And then this is important. This may be asked, what are the steps mentioned under the LODR regulations for grievance redressal mechanism, GRM. So quarterly, we have to submit a statement. Quarterly, we have to submit a statement with respect to number of pending investor complaints at the beginning, at the end of quarter, then complaints received and disposed of. Within this has to be filed within 21 days of the quarter end, and it should be placed with the board also. Very important. It should be placed with the board also. That has been filed with the stock exchange, and these are the details of the complaints received. So as a part of the board minutes, board meeting, this is one of the agendas. And who will keep the agenda, friends? Again, see, this is a compliance mentioned in LODR. So who is responsible for compliance part? Board. But who will do on behalf of the board? Remember, these are all duties of compliance officer. All duties of compliance officer. So this was with respect to, the common obligations. Common obligations for the company part. So I hope you have understood the basic whole overall structure, to whom the LODR applies, at what stage it will come into picture. So remember, again, when I was talking about the public issue, then LODR will not come. Remember, LODR is only in the picture when the shares get listed. When the company is coming out with the public issue, the shares have not listed so far. And for that, we have the another regulations, the issue of capital disclosure requirement. So ICDR regulations are there, where company has to comply with the regulations of disclosures of information with respect to prospectus, any other information, how the ads will come in. That is in a separate regulation. So LODR is only applicable once the shares get listed, after the company have come out with public issue, or let's say the company even have not come out with public issue, when they want to get their shares listed, that is also possible. So now we move on to the corporate governance provisions. Because when the company is running, the shares are listed. Now, how do I ensure that all what is happening in the company is disclosed to the stock exchange in a proper and a structured manner? In a proper and a structured manner. So we know the objectives of corporate governance principle, I think very much known to everyone, where the objective is to highlight the rights of the shareholders, to cast a responsibility on the board, to bring in transparency and disclosures in a timely manner, and giving equitable treatment to everyone. Corporate governance is not about giving only favor to shareholders. It's about treatment to every stakeholder in this whole process of driving the company. So a question which can come in the exams is about the theme on which the corporate governance premises is based. Because every introduction or any change in the law is sourced from the theme and the preamble for which these principles have been or laws have been framed. So you should know that why corporate governance has been brought into picture. And remember, corporate governance has not been defined, though it has been mentioned in company law also. And majorly, if you want to see corporate governance, everybody looks into the LODR regulations for corporate governance principles. So what has been mentioned under Companies Act, but the driving force is the LODR regulation. And today, I think every company which has got an high esteem of corporate governance principles or procedures within the company, they are always a favored investment option in the eyes of the investor. Because investors, big investors, always look into the corporate governance theory, rules, and policies of the company. Because it requires them to be transparent, disclosing everything in a timely manner. So even, let's say, if you have a high corporate governance structure, then even your rating improves. And if your rating improves, your cost of borrowing decreases. So ideally, corporate governance is not a compliance part, though it is part of the listing obligation. But in general, we should not take it as a compliance, but as a measure to facilitate the growth of the company. It's a measure to facilitate the growth of the company. Now, as we have seen, the common obligations will apply to all class of companies. But here, the corporate governance does not apply to every company. Yes, obviously, if they are listed on the main board, SME or IGP, then it is very much required, but only applies to equity shares and convertible securities, not to companies which have come out with a issue of debt. But with the recent changes that if a minimum amount of debt has been raised by the company, then also some of the provisions of corporate governance may apply. So that is the one of the recent changes which have been incorporated. And exemptions, very important. This is relevant from the exam perspective. This is relevant from exam perspective, the exemptions. Listed entities having paid up equity share capital not exceeding 10 crores and net worth not exceeding 25 crores on the last day of the previous financial year. Listed entities which have listed its specified securities on the SME exchange. But any body corporate which has been other than companies which is listed in the SME exchanges has to comply with the LODR obligations. So majorly we'll focus on this exemption, friends, which is more of a financial calculation, where the paid up share capital is not exceeding 10 crore and the net worth is not exceeding 25 crores. So that means it's a small company. So even if it is on the main board and if it's a small company, then the obligations under corporate governance may not apply to these set of companies. But as I said, in general, even if it does not apply, one should try to imbibe all these corporate governance principles within the company. So let's understand it from the practical example. Authorized share capital of the company is 30 crores and the paid up capital is 15 crores. The reserve and surplus is rupees 7 crores. Profit and loss account credit balance is 1 crore. Capital redemption reserve is 50 lakhs. Other reserve is 30 lakhs. The company secretary as a compliance officer informs the board that the corporate governance rules will not apply to the company. Based on the LODR regulation, please advise the board whether company secretary is correct or not. Net worth 25, paid up capital 10 crore. Paid up capital 15 crore. even though the net worth is less than 25 lakhs. So 15 crores and net worth, both. Word is and. Remember, not or. So though we are exceeding the paid up capital as 15 crore, but total net worth 15 plus 7, 22 plus 1, 23 plus 50 lakh, 23.5, 23.80. So net worth 23.80, capital 15. So one criteria met, other criteria not met. Because the word is and, so both should be fulfilled. It should be more than 10 crores and more than 25 crores. Then only it will apply. Because one of the conditions are not fulfilled, therefore it would not apply. So the company secretary is correct in giving the suggestion to the company regarding the compliance part. Now coming to the specific regulations which has to be taken care of. So we have section 17, regulation 17, composition of board, which is in lines with the Companies Act. Audit committee in lines with the Companies Act. Then we have some few more committees, the NRC committee, the SRC committee, risk management committee, visual mechanism, related party transactions, then obligations on the directors, obligations on the independent directors with respect to corporate governance. These are the various provisions, friends. So let us start with this 17, 18 and so on, and then gradually we'll understand the responsibility of the director and the independent directors. Now the board composition. I think practical questions could be asked because it relates to both the Companies Act also and the listed companies. Remember, Companies Act does not only focus on listed companies, it applies to every class of company. But here the LODR is directed only towards the listed company. So the composition of board is like this, where it has to be a combination of executive and non-executive directors. So in short, now we'll going further. Non-executive will be referred to as NED. NED. So it should have at least one woman director, not less than 50% non-executive director. That means more than 50% should be non-executive directors. The idea is again to bring in more people on the board which are non-working, and they should normally more involved in the overall supervisory directions and strategy for the company. It should comprise of independent directors. They shall meet at least 4 times a year, and board of top 1,000 listed companies should have one woman independent director. So top 1,000 should have one woman independent director. Then the board meeting, as mentioned, that 4 times a year, but the maximum time gap between any 2 meetings should be not more than 120 days. Any fees which is payable to the non-executive director should have been approved by the shareholders, and which should exclude the sitting fees, which is within the limit of the Companies Act. You can recall that managerial remuneration provision of 195, 196, and so on. The overall objective of the board should be responsible for framing, implementing, and monitoring the risk management plan for the listed entity. Apart from the other routine affairs, they should also be involved in the risk management plan for the listed entity. So I think the question would come with respect with this particular aspect, that what should be the possible composition of the board. Now further, very important, further, there is a separate, a more further segregation with respect to the composition. We all know that 50% non-executive with at least one woman director, and if it is top 1,000, one woman independent director. Now the further segregation will come in if the chairperson is NED. The chairperson of the board is non-executive director. 1/3 member should be of independent directors. If it is not a non-executive director, 50% should be of the board should be of independent directors. And if the chairperson is non-executive director and promoter of the listed entity or is related to any promoter, 50% should be of independent directors. So that means now independent director, the number of independent directors will depend upon the chairperson. What is the category of the chairperson? You got my point? The composition is 50% non-executive with one woman, but how many independent will depend upon the type of the chairperson, the nature of the chairperson. If it is non-executive, not working, great. But is working, the MD is the chairman, then the board will have 50% as independent. Not working, but the director is related, then again 50%. A recent provision has been introduced, but then not applicable so far, where one of the recommendations has been that the managing director should not be the chairperson. So that means going forward, you will find that the chairperson should be a non-executive person. But till date, it has not been made applicable. Let us see. Example, let us take a few examples. Number of directors on board is 10. Chairman is non-executive. How many non-executive and how many independent? By default, always remember 50% should be non-executive. That's basic criteria. 5 or more. Non-executive. Chairman is non-executive. 1/3 should be independent. So 1/3, that means 3 or more. So here it should be equal to 4. So 5 non-executive members and 4 independent directors. 4 independent directors. Number of directors on board 11. Chairman is executive. How many non-executive? How many independent? More than 50% should be non-executive. It is mentioned that not less than 50%. That means minimum 50%. So 50% of 11, 5.5. That means equal to 6. Chairman is executive. Number of independent directors again 50%. At least 50%. At least 50% again. 50%, 5.5, 6. So there should be 6 non-executive directors and 6 should be independent. Not necessarily 6 plus 6. Remember, I'm not talking it should be 6 plus 6. Within the whole composition of 11%, 6 should be non-independent, non-executive. And out of that 11, 6 should be independent directors. So it can be a non-executive independent director, non-executive independent director. That may be a possibility. Then from 2020, the top 2000 listed companies should comprise of not less than 6 directors. That is now compulsory, that it should have 6 directors on the board. Apart from the general provisions of the management of the affairs of the company, there are specific matters which has to be taken during the board meeting, specific matters. And the specific matters relate to, the first is board will review all the compliance of the company. When I say all the compliance, it's not only about LODR compliances. It will relate to all compliance under all the laws. Now, how do I ensure compliance under all the laws? So what we can do is, as a board, just a recommendation part, that as a board, we can take a compliance certificate from the compliance officer or the CFO that the company has complied with all the laws, or a report by an internal audit team that yes, it has complied with all the laws. And if it is non-compliant, what are the steps taken for the rectification of that non-compliance? Because in general, we remember please, that non-compliance of any law is a high-risk item. Therefore, it should be taken on priority because it could result in punishment and offenses being committed by the board. So no board would like to have that offense being casted upon them because of non-compliance by the company, especially in terms of ignorance by the staff. So therefore, we take a certificate which will ensure that yes, compliance has been done. Now, recently, I think 5-7 years back, new provision was introduced with respect to the evaluation of the independent directors, which shall include performance of the directors and fulfillment of independence criteria. Now, all independent directors will be evaluated by the board, where their performance with respect to their attendance of meeting, their commitment to the meeting, their suggestions in the meeting, their views in the meeting, which are recorded, that will be taken, and only the performance will be evaluated. There's no such criteria of setting of the fees or some reporting. A document will be created where the performance has been evaluated. And they will also ensure whether the directors fulfill the criteria of independence from time to time or not. So that is again one of the new things which have been introduced for the board. So from exam perspective, the constitution of board relevant. We have done few examples, remember, on the calculation part. Now, under Regulation 17, because the constitution of board is given, so for an individual also, there is a limit to the maximum number of directorship. For an individual also, there is a limit to the maximum number of directorship. So a person can be a director in 7 listed companies. A person can be an independent director in 7 listed companies, because he can be a director in 7 listed companies. And if he wants, he can be an independent director. So he can choose to be director in only those companies where he is not related. So obviously the maximum number has been limited to 7. But if he is a whole-time director or a managing director, that means he's working somewhere. He's fully involved somewhere in the operations of the company. Then in that case, the number of independent directors where he can be given as a post, hold the post as an independent director, then that number of companies will be limited to 3. So as an individual, we have certain restrictions that I can be an independent director in only a limited number of companies. Now, very important, 7 includes the company in which he is appointed. 7 is total, including director and independent director. Remember, it's not about 7 plus 7. 7 is the overall cap. 7 is the overall cap. Remember, it does not include private companies. So that means that is the privilege he has got, that he can be a director in n number of private limited companies. Obviously, subject to Companies Act limitation. That's different. It includes companies whose shares are listed only. His shares are listed. So overall cap is 7, including ID and normal directorship. So 1 is the constitution of the board. The second is the number of limits of the person which he can hold as a position of director. Now we come to further elaboration of the company. 1 is the board, which is the driving authority. Now that board can obviously drive based on delegation only. And therefore under LODR, there are provisions to create committees. Through those committees, the company would be functioning and board will have a better understanding of the operations of the company. So the board has to prepare policy with respect to risk, preservation of document, whistleblower policy, process for determination of materiality of events, policy on diversity of board. Now, this is important, friends, now today in the current context. If you see on employability, sustainability, governance, environmental, social, and governance, I think diversity of board is recognized, where we now see that within the board, we have 1 woman independent director or 1 woman director. Going forward, this may increase. The number of people working in the company, the gender ratio, all these are now policies which are framed. So a lot of things which come on the board's meeting agenda. So it will be related to remuneration to the directors, archival policy, material subsidy, and so on. So board has to look for so many things. And standalone, it cannot do that. Therefore, we have the different types of committee under the LODR regulation. So the committee relates to the audit committee, which is one of the major committees in the whole company space which are listed. And now risk management committee is also taking certain importance. And then we have the smaller 2 committees of stakeholder committee and the NRC committee, the nomination and the remuneration committee. So in exams, I think again, the focus should be on audit committee. With recent changes in risk management policy, also risk management regulation. So this could be a new question based on this topic, because some changes have been made in the risk management committee part. So let us start with the focus on the formation of audit various committees and the responsibilities which has been casted on the various committees. But before that, let's take a small break, and after the small break, we will continue and conclude this whole session on LODR regulation, friends. So small break, and then we'll rejoin in some time. And so any questions? Just let me check if you have any questions. No questions. Great. So let us understand the different committees and the responsibilities of the different committees. So when you see the overall committee in a snapshot, you will understand that the committee could be differentiated based on the composition, chairperson, role and responsibility, and other matters. So the audit committee will majorly comprise of minimum 3 directors, with 2/3 being independent. This is important, friends. 2/3 being independent. So the criteria is that audit committee has got a lot of responsibilities, and the responsibility has been mentioned in Part C of Schedule 2, which is a very detailed one. I think after the board, it is the audit committee which has got a big responsibility in terms of the operations of the company, especially and financial, accounting related matters and compliance part. The nomination and remuneration committee will have 3 directors. All shall be non-executive directors, and 50% should be independent. For risk management, again, as I said, there's been a change, so we'll review that change. And then the board shall decide for the stakeholders relationship committee. The chairperson for audit committee shall be independent director, for NRC independent director, and non-executive director and member of the board. For the roles and responsibilities, NRC Part D, and for risk management, the board shall define on the risk management policies to be framed within the company. Again, for audit committee, as for the board, it is the company secretary. So here also for the audit committee will be the company secretary for taking the role of the secretary to the committee. So very important, friends, the audit committee part. So let us take a few practical examples to understand it. Audit committee comprises of 4 members, out of which 3 are independent. Is it correct as per LODR regulation or not? So very simple. I think minimum 3 directors, 2/3 should be independent. So if there are 4 members, and if the 3 are independent, it is more than 2/3. So it is correct as per LODR regulation. Not a problem. The NRC committee consists of 3 members, out of which 1 is independent, 2nd is full-time director, and 3rd is independent woman director. Fine. It doesn't make whether the woman is independent or not. I mean, the director is a woman. The question is, it should be independent. So for NRC, all shall be non-executive directors. 2nd is full-time director. That means non-compliance with this particular aspect of non-executive director. 50% should be independent. Out of 3, 2 are independent. 1 and 2nd is the independent woman director. So that they are fulfilling, but then the 2nd director, which is working director, they are not fulfilling the criteria that 100% should be non-executive. So it is not complying with the regulation part. So these are small questions of either MCQ or true or false, or it could be a case-based scenario. Let's say 2 questions on the case-based scenario based on the composition of board, audit committee, NRC committee, and so on. So I think within this whole LODR, this is the major component which you have to remember. So let us focus now on the audit committee part. So we have understood 3 directors, 2/3 should be independent. This is important again. C part, D part, C part and D part. All members of the audit committee shall be financially literate, and at least 1 member shall have accounting or related financial management expertise. All members should be financially literate. All. And at least 1 should be having an accounting or related financial management by expertise. The chairperson shall be an independent director, and he should be available for at the AGM for answering to the shareholder queries. Then it is up to the discretion of the audit committee to call for the finance head, the finance director, head of internal audit, representative of the statutory auditor, any other such executive to be present at the meetings of the committee. So therefore, as I said, apart from the board, it is the audit committee which is the driver of supervision of the affairs of the company, especially with respect to finance, accounting, and regulatory matters. As in the board, they shall, as similar to the board meeting, they shall meet at least 4 times a year, and there should not be a gap of more than 120 days between 2 meetings. Then the quorum shall be of 2 members, 1/3 of the audit committee, or whichever is greater, and with at least 2 independent directors to attend the meeting. Then, very important, friends, this is something which has been given, especially that the audit committee shall have powers to investigate any activity within its term of reference, seek information from an employee, obtain outside legal or other professional advice, and secure attendance of outsiders with relevant expertise if it considers necessary. So that means it will have powers to investigate any activity within its term of reference. If they can want to call for any information from the employee, they will call for any information from the employee. So that is an extraordinary power which is given, and that may be given to the board. Once the audit committee passes this particular observation, then they may pass it to the board, and the board may take appropriate actions. Apart from the normal functions of audit committee, they will mandatorily review as per Part C of Schedule 2. As I mentioned, the roles and responsibilities have been given on Part C of Schedule 2. So in that mandatory responsibility, quarterly statement of deviations, including report of monitoring agency, where applicable, to submit it to the stock exchange. Any deviations which the the audit committee thinks has to be reported in terms of the compliance, they will report it. And very important, if the company has come out with any public issue or raising of funds, then a statement of funds utilization for the purpose of other than stated in the offer document, prospectus, or notice. So fund utilization certificate and quarterly statement of deviations for the compliance part should be reviewed in the audit committee. So these are compulsory part of the agenda. Now let us understand it through examples, because that is the way to recall all those provisions. Audit committee will meet 3 times a year. So it is that they will meet 4 times a year. Very clear. So I think everybody can answer it. Quorum of audit committee will be minimum 1 independent director. Quorum should be at least 2 independent directors. Audit committee will consist of 3 independent directors, and the chairman of the audit committee will be a person having sound operational knowledge of the company. He should be an independent director. So again, you can answer it. 1 member should have sound financial knowledge and accounting or related financial management expertise. 1 member shall have sound accounting and related financial management expertise. That is true. This is correct. This is not correct. This is not correct. This is not correct. So I think through these small examples or MCQs, you can very well recall those provisions. So my suggestion is, friends, when you prepare for the exams, look out for these small examples, MCQs, and then straight away learn this. Instead of going through the provisions and understanding, directly solve the questions so that your confidence also builds up and you directly come to the point, instead of all the preambles and the preface, the conclusion part, which may be a repetitive of in nature. Then we come to the NRC committee. NRC committee focuses more on the remuneration part, as we understand that provisions are there in the Companies Act with respect to managerial remuneration. So all these managerial remuneration may be passed to the remuneration committee. 3 directors, no mention of non-executive or independent. Yes, but all directors should be non-executive, remember. So 3 non-executive directors. 3 non-executive directors. What was there in audit committee, friends? 3 directors. 2/3 independent. 3 non-executive directors, because we are focusing on what? Remuneration. So obviously it has to be decided by people who are not involved. That is why it is mentioned 3 non-executive directors. You got my point? Where 50% shall be independent. So both are clubbed. Non-independent and non-executive plus the independence has been taken care. The chairperson shall be an independent director. Good. Chairperson should be independent. That's good. Then we have the stakeholders relationship committee, majorly focusing on redressal of grievances of the shareholders and all other stakeholders, including the debenture holders or other security holders, because now we have so many instruments which are being issued by the companies. So we have to take care of all the security holders, be it the preference shares, the CCDs and CCPS and every type of shares which are issued. Chairperson shall be non-executive, and the board of directors shall decide the other members of this committee. So simple regulation with respect to the chairman part. That's it, nothing else. As it mentioned, that report will be submitted to the stakeholders relationship committee of all the grievances received, solved, pending. And this particular report will be again put it on agenda on the board, because finally board has to give a report to the stock exchange. So it will come through stakeholder relationship committee. Now with respect to risk management committee. Now this is an important committee which is going to play a very important role in times to come with respect to lot many companies. As we see now, because of the dynamics and the complexities of the world economics scenarios, I think risk management committee has to play a very important role in terms of devising a plan for risk management in the event of war, in the event of any pandemic. Now these are all practical realities which we see on a daily basis, or with so much of volatility happening in the market with respect to prices of commodities, stocks, or interest rates, whatever. So every company is now exposed to a lot of risk, macro risk, which is not in control. And there are some risks which are in the control. Obviously, we cannot do anything which is out of our control. But yes, we can take certain steps to ensure that at least at certain level, we are protected. We have a layer of protection so that company does not faces the brunt of any major event happening across the world. So today, the companies now will have a policy of work from home. That is a part of the risk management committee, because now we can see that this could be a possibility anytime. So a risk management policy committee will frame the work from home policy. Risk management committee will frame the policies regarding if a particular country has been subject to certain attacks, then if my employees are there, if my working is there, how to take care of those situations. So risk management committee will take care of this particular situation. So there are a lot of now scenarios which have come on, and therefore even the regulatory agencies have recognized the importance of risk management company. So previously there were not much of regulations regarding that, but they have been introduced in the last 2 years. So it will apply to top 1,000 companies by market cap or high value debt listed companies where the debt value is very high. Market cap will be considered as on the previous year, end of the financial year. And we know how do we calculate the market cap. That's a matter of financial management. We'll not consider out here, but it will be based on the previous financial year data. So it will have 3 members on the board. Majority shall be board members. Majority will be board members. Chairperson to be a member of board. Chairperson to be a member of board. 1 member being independent, minimum 1 member being independent. And if the company has outstanding equity shares of a specific nature, then 2/3 should be of independent director. Of specific nature, then 2/3 should be of independent director. Then board will determine the role and responsibilities. Board will determine the roles and responsibilities. That is important today. So there is no such schedule which has been given in the LODR regulation. So therefore, it is left to the board. Now, what are SR equity shares, friends? These are equity shares having superior voting rights. Remember, SR equity shares where there are superior voting rights compared to the normally voting rights. So if the company has issued certain special SR equity shares, so these are equity shares with an specific voting rights, more powerful than the normal equity shares. So if the company has such kind of equity shares, then 2/3 members should be independent directors. So today, I think the SEBI has amended the ICDR regulations in 2019, where the company can come out with SR equity shares having special voting rights. So please do go through the provisions regarding the special voting rights shares. I think that may be relevant just for knowledge purpose and may be relevant for exam purpose, because these are all latest amendments which have been brought in the law. So may be asked in the exams. So this is a major change. So please do remember about the risk management committee. This is previously it was like that the number of members may be decided by the board, but now it has been mentioned that there will be 3 members. And out of that, 1 will be independent. That has been again a recent change. And this is again a recent change. So 3 points, please do remember with respect to risk management committee and high probability of being asked in the exams. If you see the recent case of Bharat Pay, you can very well understand the role of the audit committee, the board, the risk management committee in the overall functioning of the company. And from that, we can understand, yes, even the founders of the company are subject to a lot of investigations, inquiry, though everything has to be clearly laid down at what is the final outcome of that particular case. But then surely from all these cases which happen, and if you keep on tracking, you'll understand the importance of each of the committee, the role of the board in the functioning of the company. Previously, there was no such criteria of the number of meetings. I think it was once in a year, it was minimum, but now it has been mentioned meeting twice a year because the dynamics have changed and we can see a lot of new risks coming up every now and then. Then meeting with the quorum of 2 members or 1/3 members of the committee, whichever is higher, with at least 1 member of the board. So that is the new structure which has been framed for the risk management committee. So please do remember risk management committee, relevant for exam perspective, friends. Vigil mechanism, which should be for directors and employees, which provides adequate safeguard against victimization of director, employee, or any other person. So if any person who has subject to any undue pressure or undue politics within the company, then there is a vigil mechanism which has been developed for direct reporting to the chairperson of the audit committee in case required. So a structure is developed that how do I put forward my thoughts, then this policy has been created that if I want to put my thoughts, I will send it to A person, thereafter B person, thereafter C person, and keep on escalating the matter. So very much required for proper functioning of the organization and to ensure equitable opportunity to everyone, proper working environment for the employees. Okay, so let's solve certain few MCQs, friends. Constitute a qualified and independent audit committee, which consists of minimum 2 directors as members, 1/3 members being independent directors, all of the above. So we know that it should be 3 directors, 2/3 should be independent. So none, it cannot be all of the above, it is none of the above. So every listed company shall constitute a qualified independent audit committee, which consists of a CS acting as a secretary committee. Yes. 1 independent director as the chairman. Yes. Both of the above. Yes. Audit committee shall meet, very clear, no confusion, 4 times a year. At least dash percentage of directors shall be independent directors in the NRC committee. Remember NRC committee, friends, 50% shall be independent. 50% shall be independent. 50% shall be independent. Have all understood non-executive. So a small change, 1,000. Previously it was 100, now it has been expanded to cover 1,000 companies. 1,000 companies. So composition of audit committee, AC is audit committee. As on March 2027 directors, including 4 independent directors. Majority directors have the ability to read a financial statement, but none have accounting and financial expertise. Company listed its shares on 2020. Advise the company on fulfillment of requirement of LODR. So previously it was not listed. Now it is listed. So let us see the composition of audit committee. Minimum how many members? 3. It has got 7. Agreed. Majority would be 2/3 should be what? Independent. So out of 2/3, that means more than 4. 4 and more than 4 should be independent, 2/3. So here we have 4, the criteria is 4 plus as per the criteria. So it is, sorry, here it is 4. The criteria is 4 plus. So 4 plus means it should have 5. It should have 5 independent directors. Minimum it is 2/3. So minimum is 4.33 should be more than 4. So I've taken 5. And at least 1 member should have accounting and financial expertise. So here there is none. 1 and the actual is 0. So therefore, what should the company do before getting the shares listed? Appoint 1 more person as independent. 1 more person as independent, or remove 1 person from the audit committee. That can be that way also. So if I remove 1 person from the audit committee, that means I will fulfill this criteria of having 4 independent directors. So either add one or deduct one, and then include one person who should have this capability so that I fulfill the criteria of LODR. So this could be the possible case-based scenario questions, friends. So you remember all the provisions. As I mentioned, question will be from AC and risk management, high probability, and then the NRC committee. Now we come to the related party transaction, friends, which is again very important element, as we all know, looking to the Companies Act, materiality, and the kind of transactions which happen with related party because of certain examples which have been set that the related party transactions are always subject to certain kind of query and suspicious. So a policy materiality has to be defined and on dealing with the related party transaction. So policy has to be designed. And all related party transactions should have a prior approval of audit committee. This is important, friends. Please note it down. Prior approval of the audit committee. So does that mean that if I enter into a related party transaction today, I need to have prior approval? The answer is yes. Then I again enter into a transaction tomorrow, and do I need to have prior approval? The answer is yes. That means every time I do a transaction, I need to have a prior approval. The answer is yes. So in that case, what is the way out? What I will do, I will get an omnibus approval. Then let's say I enter into I will get an approval of doing a related party transaction with A for an amount of 10 crores for the whole year. And then I can keep on doing that transactions on a daily basis, monthly basis, till that 10 crore limit is reached. And once I reach that 10 crore limit, I can again go for a prior approval and then thereafter enter into the transaction. So that is the way out of getting an omnibus approval, because going daily to the audit committee is not a viable option. So that is where you get the permission in the audit committee. But then it has to be reviewed that out of 10 crore which I have approved, how much transactions have been done, how much is pending. And whatever resolutions are there, it is valid for 1 year. Thereafter, again, next year, we have to come out with another resolution. Now, what is a material RPT? One is purely an RPT. What could be a material RPT, friends? Previous plus proposed transaction during financial year exceeds 10% of annual turnover. So that is a material RPT. So there are two, RPT and material RPT. RPT is any transaction even of 1 rupee. Material RPT is total transactions should exceed, if it exceeds 10%, that is known as a material RPT. Now, what is with respect to material RPT? What happens? Related party, we can understand we'll have a prior approval of audit committee. So what if it is a material RPT? It will require approval of shareholders. Is it a prior approval? No, it is not mentioned a prior approval. But remember, existing transactions may be continued only after approval of shareholders. That means you need to take a prior approval of shareholders, then only enter into material RPT. It will be by only ordinary resolution, no special resolution is required, and related party will abstain from the voting. What will happen to government companies related? No transaction exception. Exception transaction entered into holding company and subsidiary company, whose accounts are consolidated with the main company. So these are two exceptions. So remember regulation 23 about related party transactions, very important, friends. Relevant from exam point of view. Normal RPT, what are the provisions? Material RPT, shareholder prior approval, existing transaction may be continued only after approval of shareholders. So these are again very important part of corporate governance. These are things which are covered under corporate governance. That is why they are getting importance, and companies which follow these corporate governance principles strictly probably are given high respect. Kangla Limited is related to Current Private Limited. Okay. Current Private Limited enters into contract with Kangla Limited for providing services value of 5 crore. Total turnover of Current Private Limited is 45 crore. The turnover of Kangla Limited is a 55 crore. Is this transaction material related party transaction? Now remember, materiality has to be looked into from the perspective of the company which is listed, not which is not listed. So here, assuming Kangla Limited is listed, having a turnover of what, 55 crores, and for defining, coming under the purview of related party, material RPT, it should be more than 10% of the transaction, of the turnover, which is now 5 crore, which is less than 10%. Therefore, it will not fall under the purview of material RPT. Therefore, no shareholder approval is required by ordinary resolution. A simple prior approval of the audit committee will be required for entering into this particular transaction. I hope this example would make things clear with respect to the material RPT transactions. Then something with respect to material subsidies, friends. So with respect to material subsidy, one independent director of the unlisted should be director of the unlisted Indian material subsidy. Audit committee will review the financial statement, in particular the investments made by such subsidiary. Minutes of the board meeting of the material subsidy to be placed before the board of the listed company, and all significant transactions and arrangement entered into by the unlisted subsidiary to be placed to the board of the company. So which kind of transactions? So any transactions or arrangement that exceeds or likely to exceed 20% of the total revenue or expense or the assets or liabilities may be regarded as an significant transactions and arrangements. So this is again corporate governance with respect to material subsidy. Very important, friends, material subsidies. And then a special resolution will be required in case of disposal of shares in its material subsidy, resulting in the shareholding going less than 50%. And SR would be required in selling, disposing, and leasing of assets amounting to more than 20% of the assets of the material subsidy on an aggregate basis. So material subsidy is any subsidy where we have the holding of more than 50%, that's for sure. So the provisions are that audit committee will review the investments by such subsidiary, minutes should be placed, statement of all significant transaction. If the holding company wants to sell the shares, which brings out the stake to less than 50%, SR would be required. And if a transaction has been done to sell or lease the assets of more than 20% of the assets of the material subsidy, then also will require this SR. So again, now friends, what we are understanding, specific things, related party, material subsidy. These are all independent provisions where if these are independent, I think we should be able to remember it because these are specific things, different from the normal. So related party, material subsidy. Please do remember the provisions. Corporate governance via independent directors and senior management personnel. Corporate governance through independent directors and senior management personnel. So how the regulations have been framed, where we ensure that corporate governance is complied with by bringing the independent director in the ambit and framing certain rules. So the definition of independent director, I'm not going through the definition of independent director because that you will cover in your Companies Act. The responsibility casted on the independent director. So one is the definition through which one will bring in a certain kind of independence. So that is the first layer of defining the independence. The second layer of bringing in the independence is that it shall not serve as an independent director in more than 7 listed companies. So that is the second layer of independence. And then if he is a full-time director, then he will not be an independent director in more than 3 listed entities. So that is the third layer of independence. So you now get to know that what are the different layers of independence which has been brought in. These are different layers of independence. Example, Akshay Kumar is an independent director in 6 companies. Great. What is the maximum limit? 7. He is chairman, executive director in Twinkle Private Limited. Okay, good. Executive director. He is chairman of remuneration committee in one of the companies. Akshay Kumar approaches you for advice whether it's complying with the regulations of LODR or not. The limitations is with respect to number of positions he holds as independent director, 7. So that is within the limit. But being a chairman and executive director in Twinkle Private Limited, he is a whole-time director of any listed entity. Any listed entity, remember. Because he is a chairman executive director in Private Limited, so that is not taken into account. Chairman of Remuneration Committee, that does not limit him. So whether he is complying with regulations of LODR, the answer is yes. Because the criteria is that he should not be a whole-time director in any of the listed entities. Listed entities. Got my point, friends? It is very important. Because these are small aspects which are asked in the exams, friends. Small aspects which are asked in the exams. Then with respect to directors, one was with respect to independent directors. 7.3 with definition. Next we come to the number of committees in which a particular director can be a member. Number of committees in which a particular director can be a member. First, he cannot be a member in more than 10 committees. First limitation. Cannot be a member in not more than 10 committees. Good. Then he cannot be a chairperson of not more than 5 committees across all listed entities in which is a director. And this chairpersonship and membership will be considered only with respect to audit committee and SRC, not with respect to NRC and risk management committee. not with respect to NRC and Risk Management Committee. And the limit of the committees on which director may serve in all public limited companies, whether listed or not, shall be included. And all other companies, including private limited, foreign companies under Section 8, shall be excluded. That means any position held in a private limited company will not be counted. It is only with respect to limited companies, whether listed or not listed. Very important, friends. Limited companies, whether listed or not listed. Both the angles are covered. Listed or non-listed, both the angles are covered. I hope it is bringing in certain kind of clarity. With respect to what we are talking about, the overall perspective is corporate governance. So when we try to restrict something, limit something, put it in a particular framework, I think we are trying to ensure that people work in an efficient manner, in a transparent manner, and an independent manner. So one is with respect to independent director, the second is with respect to directors, independent directors and directors. Now, with respect to directors, one is limiting the number of membership and the chairmanship. Right. Now, when he enters a particular board as a director or by whatever name, he has to disclose to the board all material and financial and commercial transactions wherever there is a personal interest. So he has to come with a disclosure so that everybody knows what is his relationship with the company. And the non-executive directors, because they are non-executive, they need to disclose their shareholding. That though they may not be receiving any remuneration, they are not working, but they may be indirectly interested in the affairs of the company in terms of in the performance of the company. And at the end of each year, they need to, go through the code of conduct, the compliance part of all the directors, and understand, yes, they are complying with this code of conduct, a deemed code of conduct. So this is another way to bring in a control on the directors, to bring in more disclosures and transparency. So from exam perspective, again, friends, very important, because a direct question could be asked that how do I ensure corporate governance through directors, not through independent directors, through directors. So one is limiting the number of membership. Second is bringing in disclosures with respect to all the transactions, material, financial, and commercial transactions, and their shareholding. Now, with respect to senior management personnel, again, as it is applied to the directors, same thing will apply to the senior management person regarding disclosure to the board with regard to material, financial, and commercial transactions, and conflict of interest relates to dealing in shares of the entity, and commercial dealing with bodies in which the senior management and their relatives have their holding. So if the senior management personnel is trading in the shares, they will try to disclose it, their interest, that what is they are trying to do. Good friends, I think that is good enough for the preparation in terms of exams. Now, who are senior management personnel? That has to be defined, understood. So let's say we have the chairman, we have the whole-time directors, MD, whole-time director. So we have HOD1, HOD2, HOD3. These are regarded as SMPs. So head of marketing, finance, or operations, the CEO, the plant head, by whatever name they are termed as, they could be regarded as senior management personnel. So if you have any questions, please keep on raising. So I hope Vidula, Malavika, they are all watching these provisions. I know may not be much of importance when you see the content and the percentage of quotient as in the exams. But as I said, these small topics, if you cover, this can probably bring in value to your results. Value to your results. And we want value. We just don't want 40 marks, 50 marks. We want value. So they are compensating for any deficiency in the overall 8 subjects which you are covering, and maybe of great help in getting those benchmark marks of clearing the exams. Corporate governance by providing information. Corporate governance by providing information. So provisions where we need to pass on certain information, and through that we ensure proper corporate governance. So as I mentioned, that there are schedules which have been created. Under those schedules, the criteria for audit committee, the NRC committee have been placed, stakeholders committee have been laid down, that what is to be discussed in those committees. And part A of Schedule 2 covers the matters to be placed before the board, and this is done by the compliance officer. So he will bring in all these agendas for discussion at various point of time, maybe for the quarterly, 6-monthly, annual, whatever the meeting may be. So this again brings in certain kind of pressure on the board to discuss each matter, record in the minutes, so that it is brought to the notice of shareholders that what has been discussed in the board, what matters have been pointed out in the board, and what does the board thinks about the current state of the company and the future prospects of the company. So it is in the form of plans, budgets, quarterly results, minutes of the audit committee being placed on the board, information on the recruitment of key important personnel, any legal notices being received by the company, any accidents, any frauds, any default in the financial obligations in terms of repayment of loan to the lenders, any joint venture agreement being entered into, any new kind of addition of intangibles, sale of intangibles, sale of any major assets, exposure to the foreign exchange, subsidy related matters. So lot many things are now covered under the board. So which itself brings in that everything has to be brought on record, table, record in the minutes, and because it is a public company, things are available for inspection. So boards do discuss these matters, and it is not for the sake of creating a board we are creating this board, but yes, it is, the matters are discussed and taken care of. Corporate governance by compliance certificate, now another board. So one is by bringing in various matters for discussion on the board. Then we bring in a compliance certificate. What is that compliance certificate? Very important, friends. The CEO and the CFO shall provide a compliance certificate to the board of directors as specified in Part B of the Schedule 2. So there is Part A, which brings in the agenda of the board. Part B brings in the compliance certificate that they have reviewed the financial statement for the year, and to the best of their knowledge, these statements do not contain any material untrue statement or omit any material statements, and which might be misleading. And these statements present a true and fair view, because remember, these are to be presented every quarter, and every quarter the auditor also gives a review, but that is a limited review. That's not the audited financial statement. So one is with respect to that the statements do not have any material untrue statement and they present a true and fair view, and there are no transactions which are fraudulent, illegal, or violative of the listed entities code of conduct. So two things which are covered during this whole thing, friends. Very important to be taken care of to be understood that as a board member, I think we all should take this certificate, which is very essential, and is part of the whole conduction of the board meeting. So this way, we are trying to control the CEO and the CFO also. So one is on the control on the board, then control on the SMP, senior management personnel, by bringing in a compliance certificate. So the CEO and the CFO will be held responsible if there is any untrue statement. Further, that they will accept responsibility for establishing and maintaining internal control within the company. They have brought in to the notice of auditors and audit committee all the significant changes in control over the financial reporting, and instances of significant fraud which they have become aware and the involvement therein, if any of the management or an employee having a significant role in the listed entity's internal control system. Try to understand, friends, the importance of all the personal and the responsibility casted on these people. See, in an appointment letter, when you are given to CEO, CFO, probably these should be covered so that they understand that as a CEO and a CFO, I need to provide this compliance certificate. As a part of their JD, job description, this is part of their job description, friends. This will provide a certain level of confidence to the board, the audit committee, because they are not involved in the day-to-day operations, the independent directors. Yes, the operations are being maintained properly, and this gives them the cushion and a base for approving certain transactions which are required or expected out of them. Then whatever has been mentioned, friends, from section 17 to section 26 as a part of the corporate governance, how do I ensure everything is going on fine? So for that, we have a compliance report on the corporate governance. Where quarterly compliance report has to be submitted within 15 days from the end of the quarter. And then compliance report to be submitted within 6 months from the end of the financial year, along with the second quarter report. So one is quarterly and one is the annual. One is the quarterly report and second is the annual report, which is required to be submitted, friends. So in this way, we ensure that whatever has been set out as guidelines under the LODR obligations, we need to comply with all those regulations. So now, if you see the overall picture, friends, corporate governance through establishment of committees, audit committee, NRC committee, stakeholders committee, risk management committee. Along with that, these are mandatory. Along with that, we can have a vigilant committee or the preservation of documentation committee, or it can be directly placed to the board. It can be whistleblower policy. These are small policies which are created. And for that, if you want to create a committee, it can be done. But 4 major committees are created. Then the structure of each of the committee, which is very important to ensure proper segregation, independence. So remember those segregation structure. Then we come to the specific provisions on the independent directors. How do I ensure corporate governance through independent directors? Then we come to specific provisions of directors. Then we come to specific provisions of SMPs with respect to disclosure of material transactions, holding of shares in the body corporation in which the company is doing certain transactions. So SMPs. Then corporate governance through getting a compliance certificate from the CEO and the CFO. And for ensuring that these are followed, we need to submit a report to stock exchange that yes, I'm trying to comply with all the provisions. So layer after layer after layer, it ensures to the stakeholders, shareholders, that yes, things are working in the right direction. But in spite of all these, there are certain situations, friends, where you find that company has committed some mistake, non-compliance, fraud. It happens. It's all part of this system, friends, and things are getting evolved day to by day. New things are evolving, coming up. So we cannot foresee a perfect, ideal situation because it's all subject to human error, system errors, and human nature, which is outside the control of all laws at times, Now, certain regulations, small regulations, which cast a responsibility on the compliance officer to intimate to the stock exchange, because these are all certain kind of information which has to be passed on to the public, so that public is aware that these actions, events are happening within the company, and accordingly they can decide on purchase and sale of shares or whatever action they want to take. So there are certain responsibilities which are casted where prior intimation has to be given of the board meeting with respect to financial results. If the board meeting is meeting for financial results, so 5 days in advance, so people know that after 5 days, the board will be approving the financial results. For any other matter, at least 2 working days. So one is 5 days, again relevant from MCQ point of view. Then prior intimation for at least 11 working days for these type of things. So 2, 5, and 11. So 2, 5, 11, prior intimation. 2, 5, 11 are for prior intimation. Remember that, friends? And then for smaller issues of record date, dividend date, website updation, there are a number of days which are given. I think as a suggestion, we should all think that bringing in uniformity, of instead of so many dates, let's put up one date. These always create a confusion, but yes, from the operational point of view, from the criticality point of view, the government must have thought, obviously, then that's why there are so many different dates. But somehow things could be devised where we have one date. But yes, that will bring in a lot of pressure to the company itself. But then that is the disadvantage of getting listed while reaping the benefits of getting listed, right? So one is prior intimation. Then we have the annual and quarterly compliances to be done, for which there are a lot of regulations which come in. So we have corporate governance, which we have seen from the 15 days from the end of quarter, then the financial results within 45 days from the end of the quarter, and 60 days from the end of the financial year. So this is important. This we have already discussed. So financial results every 45 days from the end of the quarter, and for the annual results, 60 days from the end of the financial year. So this has to be done. So this is important, friends. Quarterly compliances. Yes, what are the quarterly compliances? Grievance redressal mechanism, corporate governance report, holding of specified securities, again, not that, yes, financial results, and statement of any deviation or variation. Deviation or variation with respect to utilization of funds for which the funds were raised. For with that respect, if there's any deviation or variation, you need to mention that. So these are quarterly compliances. So I think if you are able to remember 4 of it, grievances, corporate governance, because we are studying that, quarterly results, that is always there, and statement of deviation and variation. So 4 things with respect to quarterly. And if possible, if you can remember, shareholding pattern for each class of security. Then we have the annual compliances, financial results, annual report. That are 2 very much a part of the whole process, that we all know that each year we get a financial result and annual report. Okay, a few MCQs before we conclude, and I'll try to show up one annual report in practical. So listed entities shall submit a statement showing holding of securities and shareholding pattern. We just discussed that, you can skip that, but because it is an MCQ, I think you can very well remember it on a quarterly basis. Yes, on a quarterly basis. For declaration of dividend intimation shall be required to meet at least 2 working days in advance. Yes, the answer is 2. It is already mentioned out here, so you don't need to answer it. Updation on website, friends, again, very important. We need to update the website. I think that was mentioned out here. Yes, a listed entity shall update any change in the contents of the website within 2 working days. So 2 days, within 2 days, we need to update the website. Audited financial results, 60 days. Audited financial results within 60 days. Okay, so friends, this is about all LODR provisions. Majorly, remember, corporate governance. Apart from the basic understanding of compliance officer, the compliance responsibility, and to whom does it apply, the applicability part, I think the major part is about the corporate governance. So let me just show up one annual report to all of you so that you also understand. Just 1 second. Let me see if I have one annual report. Yeah. I hope this annual report is visible, and this annual report is of a listed company, a good listed company with a lot of measures taken by the company with respect to corporate governance. That's Asian Paints. And if you go through this report, so I'm just highlighting the important points, not going to details of report, though this report has got so much of information, and that is a voluntary disclosure, friend. It's not about that it is made out of law, but out of voluntary disclosure, they have provided so much of information. So one is obviously the management discussion and analysis, which is again a part of this your annual report, which is again a key factor of corporate governance, which talks about the management view on terms of economy, the overall industry, and how is the industry looking currently and going forward. So this is a voluntary disclosure by Asian Paints of so many pages. It is about around for 10 pages they have discussed. So understand how these 10 pages are created, how they are to be disclosed. You know, these are all part of the compliance officer, and it is approved in the board, the annual report. So this is one, the MDA part. Now we'll come to the specific okay, this is the notes, notice. Yes, so this is notice. Okay, no, we forget the notice part. Okay, so now this is now important. Let's say, so this is respect to information given about the directors. So you see the name of director, which has been mentioned. Name of directors mentioned. Relationship with the directors, between the directors is mentioned. If you see the relationship here. Number of meetings attended during the year. It is mentioned. Chairperson detail, membership committee details, that is mentioned. If you, the remuneration which is paid to the director, it is mentioned. Details of the independent director, it is mentioned out here. Then experience in specific functional areas is mentioned out here. Information at a glance. So this is about the basic information about the AGM and so on. This is the board report, which talks about the company's performance, subsidiaries performance. Then they talk about, see, remember here, they talk about the nomination and remuneration policy, especially a part of the board report. So they are trying to give information. The policy is also available at the website of the company. Here it is mentioned. See, remember, this is the highlight. The policy is mentioned in the website of the company. Then the remuneration and of directors and KMP. So again, this is a policy as per section 197. They mentioned board evaluation. So as I mentioned that the evaluation of the board has to be done, and here they have engaged a agency, external consultant for evaluation of the board. So please see the criteria, the basis of evaluation of the board. For that, agency is appointed. I am appointing a person to evaluate myself. That is the one of the level of corporate governance. Then, with respect to independent directors, some information. This is fine. Something about registrar and transfer agents, RTA. We have discussed about the registrar and transfer agents, so some information is given. Then with respect to the committees of the board. So here there are 7 committees: audit committee, nomination remuneration committee, CSR committee, corporate social responsibility, one of the important angles as per company law. Then we have investment committee, shareholders committee. So there are different committees. As I said, there are minimum 4. Apart from 4, there can be more. So there are 7 committees for this company. And information about each of the committees given. Related party transactions disclosure is given here in related party transaction. If you see related party transactions. Other disclosures, which is more voluntary, which is done by the company itself, management itself. Statement of disclosure of remuneration. This is as per Companies Act. Secretarial report as per the Companies Act. Secretarial report as the Companies Act. These are all part of Companies Act. Okay, not. Fine. So friends, this is one example of yes, report on corporate governance. See, this is one report on corporate governance where details of directors, the number of meetings they have attended, the chairman, the member of the committee that person is, then skill and expertise of each director. You see, that gives us the confidence that there's a person who is holding an audit committee position. He's got the knowledge of this much area and so many experience, so much of experience. This is report on corporate governance, formalization program. Yes. Details of the committees of the board. So audit committee meetings, how many meetings have been done, meeting attended by whom, through which mode, NRC policy, then the details of the NRC policy, details of the remuneration paid. It is an endless disclosure information given by this company. So friends, again, report on corporate governance continued. Okay, fine. So it is an highly informative report. So go through the reports of good companies, Asian Paints, Infosys, TCS, and then you will understand the applicability of all these regulations and how the companies are incorporating them as a part of their disclosures, report, and probably then you will be able to remember it. The whole objective is for showing this particular report on the screen is that at least it will give you an idea that how it is practically applied. And I would suggest that please go through one annual report or 2 annual report of a company, which will cover various aspects: company law, SEBI, LODR. So it is part of your whole course, and then certain kind of information of capital market. So you'll get to know lot many things which are relevant to your course. So that is my suggestion, friends. So if you have any query, you are welcome to ask the queries. I'll be answering those if there are any. Otherwise, it was wonderful coming out. Vidula, on what area it is confusing? Don't get confused. Remember, confusion part is only with respect to independent directors. That may be a bit confusion, and in terms of directors. Otherwise, Companies Act applies to every class of company, remember. LODR applies to listed companies. That is one differentiation. Then, with respect to independent directors, the definition remains same. But for listed company, there might be certain differences. And for committees also, there might be certain differences with respect to composition part or the number of persons. Otherwise, there is no such confusion between Companies Act and others. So don't worry about any confusion. Just remember, when you see the question, see the question whether it is for a listed company or a non-listed company. So if it is a listed company, try to come to LODR. If it's a non-listed company, private company, refer to Companies Act only. Restrict yourself to Companies Act when it comes to independent directors or committees part. So there the differentiation begins, and differentiation is with respect to only the composition part of the committees. That's the difference where you will come across. Otherwise, on the definition per se, both will remain the same. I hope it is clear. Vidula, yes. So, thank you, friends, for attending today's class, and this would be my final class with you. Hope you had a wonderful learning session on different aspects of the topic which I had covered. And I'm sure with each day getting validation to your knowledge, which should happen, you would come out with flying colors in the exams as well as a professional. So thank you. In case of any query, you can obviously send a message to me or to the institute. I have, don't know whether I have shared my number or not. I'll just put it on the screen so that you can so do send it a message if anytime you require. I'll be more than happy to answer to your queries. So thank you everyone, and wish you all the best.